The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Happy New Year, Christmas Eve here. We're going to actually do a show that's not going to have a lot of action today in the forthcoming couple hours here. It's very, very light. You guys really probably shouldn't be trading today, but I appreciate you attending the show today. We're going to cover a couple of things that have happened this past week and maybe a few things to keep on the radar screen for the new year. But it is balmy here in North Carolina today. I mean, I'm just completely, it does not feel like Christmas outside. It is over 70 degrees, I believe, already this morning. 70 degrees Fahrenheit. Feels like Asia, Southeast Asia, put it that way. So I hope you guys are set up good for the holiday here. It's nice how everything's kind of pegged itself for the weekend this year, the Christmas holiday and the New Year's. It's kind of interesting how that is going to coincide with the weekends, which is kind of cool. And every time my father died in '75, and Christmas was always something. When I was little, he used to tell stories about the coldest he'd ever been was in the Christmas time. He actually landed on Utah Beach and ended up in the Battle of the Bulge of all things. And he said he's never been that cold in his life. I mean, that was just a harrowing experience. I can't imagine, that what happened there. But man, he used to always mention how cold he was around Christmas in that experience. He used to mention some other things, a lot of terms. Blank on a shingle, if you guys know what that means. He said he used to hate when they served that. That was like I know. Anyway, guys, we're going to take a look at the dollar index really quick. We've pulled back again to that 98 area. That's a really, really important area for this thing to hold. And I'm going to go to the scanner really quick. It is amazing how hot it's. I mean, I'm hot here right now on Christmas Eve, and it's supposed to be actually higher temperatures tomorrow. Incredible. We're going to go into the futures section. We're going to take a look at the dollar index down here. As you can see, it's got a little arrow pointed down there. 3. We're at the bottom. This is something we're really going to have to hold. I mean, if we start breaking down below here, I'm going to have to personally get stopped out of this trade. I'm a big fan of being long the dollars, you guys know, and that's going to, a lot of these currencies are going to continue to trade over the holidays. And I think the euro right now, we talked about the possibility of this thing getting back down below 109 again and trying to play that short game. You got to keep your eye on the dollar. You got to keep your eye on that 98 level, because if that starts breaching on the dollar side below 98, we're going to more than likely, in an inverse relationship manner, have the euro move up a little bit. We're going to hit the Canadian dollar really quick. This is something I just, we talked about a new profile appearing below price action yesterday, and we talked about that would be new support for this 138.12. That's still the case. I think we've got. Let me see how close we've gotten to that. 138.36. Top of the profile, 138.12. So we may still settle back a little bit farther in this, but I really continue to like the action in the Canadian dollar. All bets are off below 136.60 if you're doing this on a very long-term basis. That's the outside of the envelope on the the current profile on the daily, but keep your eye on the dollar. If that thing can, gets stronger again and bounces off 98, I'm just considering this will probably retest 140 and even higher. Just to cover a couple other currencies, the Aussie dollar, again, acting extremely well relative to what, our game plan is on the 71.69 and the 71.90. Got a nice move up. I love how this thing's holding up. I think it's enjoying, to some degree, maybe a hint of a commodity rally. Not rally, but retracement, I guess is the better word at this stage. And we're going to take a look at the Russian ruble really quick. This has been something that's gotten above 70, which is incredible. And we talk about always, if we have new profiles attempting to appear or appearing, we've got to kind of put on the brakes and reassess it, kind of wait for a while to see if we're going to hit support or break out again. And we've almost come down to support again at 68.57, but we're back above 70 now. So had a pretty volatile time in the Russian ruble. Here's the long-term weekly. No reasons whatsoever at this stage to take off any long-term investment grade type trades on the long side. Those are things you don't have a lot of hints of any type of sea change events going on. Let's take a look at. Let me go back to my other screen here. Let's obviously take a look at the S&Ps really quick. Yeah, John from Philadelphia. I mean, my father ended up spending 2 years in a hospital after one thing that they got into. Truly, a crowd of heroes. I mean, and then it makes you sick when you see some of the things going on today, and some of the lives that have been lost militarily by citizens of this country, and the people now don't seem to either remember that or care. And it's sad. And you somehow we could go on a whole show about that, but somehow being in the military, as far as some crowds of political factions, is a bad thing. It's, where do you begin on that? People have lost their lives for this country. They've done what this country's asked them to do, and this is a great country. Anyway, 2057 S&Ps. That was the we talked. I may have sounded like there was some dark gray clouds around me the past couple of days talking about these S&Ps. It's been a very choppy for me. Choppy meaning chopped out, stopped out. 2057, we talked yesterday about, we're kind of in no man's land. We're going to have to either wait till we sink back below 2025 or approach 2057 to get happy about being short again. And that actually was reached yesterday. And we're going to have to look at that as a serious lid. That's our daily. If you look at this thing, how it's functioned around these daily inflection points, and again, a lot of our automated systems trigger around these daily inflection points. I mean, these are the most of the four time frames. This is probably my favorite. So as we look at 2057, that's going to, I don't have any lofty aspirations that we're going to blow through this today, put it that way. We're going to have light trading, so that's going to be something you could lean on if somebody's got a gun to your head and you got to pull the trigger today. Notes, again, 126. In my opinion, you've got a chance for a little bit of a trade there, a trading type move, not an investment grade type move. Markets could come off that 2057 on the equity side, and then we might have a little bit of a bounce here around 126. But again, this is something holiday season, light trading, the whole 9 yards. It could be something to lean off of right there. Give yourself a little bit of noise room there. We're going to go back into the futures section. I'm going to show you this. And by the way, I have to say something about this. There's that bottom right there. And let me see if we can pull up a chart. Yep. We're getting these slowly in here. See if we can get a. There's our 240s. There's our 1 hour. have to make a small footnote. We put this sign in here a little late. I asked somebody to put it in the other day. We had one. We're obviously shutting down servers and loading data and getting ready for these charts in a process to update real time all the information. And our ETF grid wasn't updating. I mean, it doesn't mean the internals weren't updating. This thing was running like a top, but our ETF grid was not exactly. We'd shut down a server and it tried to notify everybody, and found out we didn't get the notification out. So I actually put it out yesterday, but it wasn't exactly showing the ranking system correctly here. And I apologize. It's actually updating now. Doesn't mean any of the speed dials weren't working, or any of the underlying instruments weren't working. So I have to apologize for that. John from Philadelphia, my father had a different experience. After World War II, they were still taking, I guess, somewhat better care of veterans. And they had converted, what's that resort up in West Virginia that they now play golf? And it was, is it Hot Springs? No. Maybe somebody can pull that out in the den. It's a famous resort up in West Virginia. Anyway, they had, after World War II, or at the end of World War II, they had turned it into a hospital for veterans. I don't know if you guys know that. So, my father spent 2 years in a hospital environment, and towards the end, they forced him, for rehabilitation purposes, to go out and play golf on that. Yeah, Greenbrier. That's it. They forced him to play golf there as a rehabilitation thing, and my mother said he would never play golf again after that, or never even try to play golf. But that was converted to a. If you look that up, I'm pretty sure. I've only heard it from my father and my mother, but I'm pretty sure that's on the internet somewhere. How they converted the place. All right, so let's take a look at. Let me go back to the currencies here for a second. Live currencies. I wanted to pull up the Japanese yen. I mean, just as, and I wanted to say this, just as the Canadian dollar is kind of acting on a relative scale very well with the dollar and being able to kind of get some triggers there, the Japanese yen is kind of showing itself as somewhat opposite. As it used to be Canadian dollarish, now the yen is getting more valued relative to the dollar. And we're going to talk about the trigger points on the Japanese yen when we come back, guys. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're finishing up with the Japanese yen, and what I was trying to say is, just like the Canadian dollar is kind of showing that relative strength, or has showed it for a long time, that could change ultimately, especially with crude oil showing hints of popping its head up. We hit that inflection point. We're going to talk about crude oil in a little bit, but the Japanese yen is kind of showing that relative weakness on a chart relative to the dollar, when this particular product had always showed that opposite relative strength. Now it's kind of relative weakness situation, and the Japanese yen is broken below our daily number here, 126.58. I want to go back to my weekly here and show you it's been not okay to be long and okay to be short. I've been passing on shorts myself, but as this thing starts now showing itself as a different situation relative to the dollar, you got a new breakdown opportunity here, 120.65. 5.66. Do I think the dollar is going to rally? I'm a big fan of the dollar being in a supportive nature at this stage, right at 6.98. But you got a kind of a situation here. If the dollar rallies, we could pop our head back up on the end. But if we don't, and we sit here, then boom, it might be time to start looking at this from the short side a little bit. Just reading some of the comments in the den. All righty, so that's it for the currencies. Let's go back into the futures really quick. Let's hit crude oil. And we talked yesterday about a stock. Somebody mentioned in the den yesterday afternoon when I was talking to Tom. I'm going to hit crude oil really quick first. We talked about crude oil possibly exploring the entire fair auction up top. We didn't have a close yesterday above our inflection point there, 37.62, And we had some people piling into this. I looked at the volume numbers. Talked to some people on some desks. They're not really convinced, even though we're kind of rattling around above this previous unfair low 37.55 and the current unfair high 37.62. I'm going to show you on the scanner here. We're going to go up to WTI crude oil. Where's that? There we are. And as you can see, it's showing top one there. What does that mean? That in flashing, that means that we're still within the neighborhood of a noise factor, even though we're kind of first time above that level and showing top. This is our landscape view. We're kind of, got some resistance here. I mean, you got the 240, 37.95, 37.62. It's a day where nobody's really at the desk. I wouldn't consider this a breakout at all. I would consider this a noise factor, and I would consider this we're in a downtrend. We've used that same mechanism for a long time to sell resistance and sell breakdowns. And I'm even though the XLE went kind of bonkers in some of the components inside, and I'm going to go to the XLE really quick. We're just going to reference this. I love how the XLY is acting, by the way. Here's the XLE stocks. Here's the long term on this, just kind of coming off the floor a little bit. Nothing to totally write home about, but 6109, that's a big number for the XLE. And what does that mean, all things considered? I'm not so convinced that this is a breakout for crude oil. In fact, I think we just rallied, my personal opinion is we just rallied up to the top of our profile, and when we go back to the weekly on crude oil, we don't have any new profiles attempting to appear here. So that if we had a yellow bar start to happen here on the weekly, and I'm going to go back to WTI really quick, there's no peel back yellow sign in the scanner. I think, this is still a shorting opportunity, actually. Natural gas got a great pop for you guys who've been following that. Let me go back to that. This is our January contract. We talked about this yellow bar starting to happen on natural gas. That is not happening on crude oil. So, this was kind of the sign that there were some things going on in natural gas that were a little bit, a telling tale, so to speak, a new demand area happening on the very long term, which gives it a completely new floor. All right. That hasn't gotten into force yet. I'm kind of interested to see where those big inflection points are going to be. But, we've had a decent move in natural gas. Now you've got 1975 or 1.975 sitting here. We've kind of rallied off that this morning. We closed above it yesterday. We're going to finish up with this and talk a little bit more about some oil-related stocks when we come back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, guys, we looked at natural gas a little bit here. We talked about it, and I want to go back to crude oil for just a second. Okay, so this is the drill. Obviously, we broke stride on our 240s. We had done that before. We had some bounces before. We were always met resistance, and were able to kind of succeed with that from the short side. We've got new supply happening here on the 240, and we've also got the daily sitting here, and we're kind of just hovering in this area. Now, I'm suggesting not to really do a lot of trading today or really get heavy over the holidays here, but if we spin around here, and I'm just kind of waiting to see how the action goes. It's not I know you can say, well, thanks for letting us know that you're going to wait again. but if, this type of action around this inflection point, if we just kind of spin around and consolidate here, that'll be relatively decent news for a lot of people who are looking to start piling into crude oil from the long side. There's still a lot of supply out there. And some of the things that were going on yesterday in the underlying instruments I want to get into. We had looked at, here's the XLE. Let's see. On the 60-minute, let me see. Let me just pick it out here, the XLE. We had talked yesterday, in fact, yesterday morning about SWN, and we talked about it because it had rallied. It was on the downtrend. Excuse me. Let me just state what it says here. It was on the downtrend resistance, custom sort. All right, so SWN yesterday. Tammy, you're asking the wrong guy that question. What's the meaning of life? I'm not qualified to answer that. SWN, we talked about yesterday. It was, kind of already sitting at so-called resistance at 592. But we talked about, even though that was on the radar screen on downtrend resistance, we said, you know what, crude oil may kind of lurch higher. Some people will possibly get squeezed on this. And we talked about, I'd rather buy this actually on a breakout. And this stock actually really acted well. This is, what, a 20-some, is that a 18% move in one day on SWN. And this thing had been beat to crap. So, you're going to get those types of moves. But it's nice to see how these balanced areas work. When we get outside them, they move relatively quick. And I want to also point out that you may be looking at the scanner going, well, we were actually showing a hint of a new demand area happening below. We had a kind of an orange yellow peel back on this, and now we've actually got a green. So what's happened? What does that mean? That means that when we do have a new profile output on this particular stock, we're actually eclipsing the entire profile outside of it already. That's relatively bullish for this stock. I'll just say that. So we went from red to green. That does not happen that often. This stock's been obviously just completely crushed. I don't have to tell you that if you've had this in your portfolio, and I'll feel for you. My goodness, where's this thing come from? 52, 50? But you may have a little opportunity here, and you'll have a nice floor down here on SWN. So do I consider this a relatively safe play, considering crude oil, it's yet to be seen whether it's going to go up farther. This little stock right here may be something to pay attention to. Let's see. Okay. All right. We're going to take a look at Disney really quick. This is, showing itself extremely well from the short side. I don't have to tell you that. We had a past couple of days, 3 or 4 days, just rocket ship up on the index, and this thing's just continuing to trail down. So where's the ultimate bottom on this? We can revisit 96.42 easily. Next stop on it in a wide profile. Remember, this POC is going to take, you're going to have to consider this, 102.83. So, this is something that we may get a little bit of a trading bounce. Do I think the S&Ps are going to climb higher? I think they're going to relax a little bit here. And, if the S&Ps relax, the theory is on a relatively weak instrument that's showing itself, this thing will probably continue to trail down, bare minimum, down into 102.83. And if the S&Ps move up, hopefully this will only move sideways. All right. So I think you've got an opportunity to hit this all the way down to 96.42, really. And, we always look at, what's the regulator of the trade, the 240s. So you've got resistance now at 105.81. You've got a little bit of a support at 102.83. But I think you can kind of continue to hit this with stops above inflection points on Disney. It's amazing how this thing is really showing itself like right now. Let's go into the scanner for a second. Let's look for breakdowns. Let me go back to my S&Ps here. Truly amazing. These are the only two stocks that are considered breakdowns in 500 stocks right now. CME Group and BBBY, Bed Bath & Beyond. So let's take a look at them. And what does that consist of? That consists of having a first bar below profiles on the weekly or the daily and getting clean and clear through noise levels. So let's take a look at BBBY. And again, the theory is relative strength type trading. Ouch. So you're looking at Bed Bath & Beyond, and you're looking at the inflection points. You had a new profile appear above price action. You've got a good selling area now, again, at 50.38. Remember, this has been one that's been on the radar screen for a while. If you watch this show, BBBY has been something, you just sell resistance. Look at that. sell breakdowns, sell resistance, sell resistance, sell resistance, sell breakdowns, retracement back up into 5038. You're probably going to have another opportunity to sell this. You've got a lot of overhanging supply problems down here. All right. Don't see things turning around too quickly on this stock either. CME, this is our daily. Another breakdown here on CME. You've got good resistance now, 92.47. A stock like this that's showing itself in just a massive, what was that, 80 point S&P rally all of a sudden. This should be on your radar screen for an opportunity to sell. It's definitely not on your radar screen for an opportunity to buy. Let's see here. All right, let's go back to the scanner really quick. What I want to do here is go back to my XLE stocks. And we want to take a look at some of the things that are going. APC, okay, so this has been in a horrid downtrend for a while, APC, but we've got this yellow peel back happening now, APC. Tucker, I would love for you to call in about the, we're going to have a lot more things in the scanner next week and finally get you guys that upgrade. What is this? I broke my e-signal here. Let me see if that's happening on other stocks. Well, I can't pull up APC for some reason. Let's see if we can do it. Let's see if we've got this chart in APC. Daggone it. No, we don't have the historicals in yet on that one. Well, the only stock I want to pull up. Here we go. EQT. Not okay. Here we go. EQT. This is a nice situation here. EQT Corp. Been down on the latest breakdown 8 weeks, showing a new demand area attempting to appear, and we've also got a 1 here on our daily. All right, and some nice green shoots that have happened on the other time frames. Let's pull this up here. EQT. All right. Just like SWN, this is a really cool situation here. I wouldn't be hesitant to start looking at this from the buy side for a while now. 51.89 closed yesterday. This is our weekly chart. All right. And what the scanner is telling you is that we also just kind of had a breakout finally from just a eternal wave down on a lot of these energy stocks. My goodness. All right. So this has happened before. There's no question about it. But again, do I want to be short this right now? Absolutely not. And you've got a chance here to use 50.44 support on this. And we would hope in this instance that crude oil would kind of spin around and head higher. You may be able to get a nice little trade out of a lot of these oil stocks just as a relief type move up for a lot of them. All right, so EQT should be on your radar screen. Let's take a look at a couple others. Similar situations. CHK, Chesapeake Energy, exact same setup. New demand area attempting to appear on the long-term weekly and first breakout situation. So CHK, let's take a look at that one. CHK. Here's the, ooh, God, this is so ugly. All right. So this is probably going to be a decent risk reward scenario. You got your stocks trading 440. We can retrace back up to 658. So you do the math on that one. That's going to be what? Possibly a 50% move. And you've got a little breakout happening here on CHK, and you know where to put your stops on this one. You got to put stops below 367, but you can put some stingier stops below 412. So EQT, CHK, you got some decent trades going on here that you should put in your portfolio and monitor in the scanner. Just build a custom portfolio. Look at some of these stocks that are acting in this manner. A lot of them had breakouts. I'm just going to do, let's just see, breakouts. All right, so that's going to take the sector that we're looking at, this XLE sector. It's going to just kind of put on the radar screen what actually was showing 1 in our daily or 1 in our weekly. So let's look at HP really quick. Let's see, what's the inflection points here? 54.78. So I'm going to go back to my scanner. I'm going to look at HP. There's that 54.78 top of the profile. We've been in a downtrend on the daily for quite a while. So what do you do with this? I would have loved to have seen this completely get out of our daily balanced area. But you've got 54.31 bottom of the profile on our daily, 54.78. So you could look at this. I think there's better opportunities out there than HP, but you've got some leverage here now on the long side, possibly putting the stops below that DMZ that we just talked about. Let's take a look at, this is a SWN. We already looked at that. Let's take a look at XOM. This is probably in a lot of portfolios out there. XOM had really been something that had shown a lot of relative weakness in the old days. We talked about this if you watch this show, but 73.29. We had a long-term profile that kind of edged up and broke stride from our long-term tranche down here. And what do you do with this now? So you now have in a very wide profile, you got a POC. We just poked our head above 79.58, and we also broke out on our daily. So 79.50, what was that number I just said? 79.58 coupled with 78.79. You've got about a 75-cent DMZ there. ExxonMobil could place stops below and start looking at this from the long side a little bit. It's been a stock in the XLE that's held up without question a lot better than a lot of the other ones, but you might not get the biggest move and bang for your buck on something like that. The EQTs, the CHKs. Let's look at Halliburton. It's been 26 weeks down. No hint of a new profile appearing on the weekly. That's why I love that SWN trade and the EQT trade and the CHK. So those three are like hot situations. But let's take a look at Halliburton too. These are breakouts. Here we go. All right, so this is kind of the situation on Halliburton. Again, I think you've got probably better trades out there, but again, breaking out of a balanced area that was relatively thin, 35.10 will be support on this. I'm going to answer that question, Jay, when we come back from break. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So in honor of, to answer Jay's question he had a while ago, do custom sorts and even manual sorts that you guys want to, do with the upper right or upper left portion up there. I'll show you how to do that in a second. Do they, dynamically update? Yeah, and that's the cool thing about this. And I've made a little custom list here, and I've called it Jay and his favorite other name, Ralph. So it's called J Ralph, and we put some instruments in here, and you can move these around. You can whatever, put them in any order you want to. But I've got the S&Ps, the Euro, crude oil, CHK, EQT, SWN, Disney, natural gas, and Amazon. So what I'm going to do is I'm going to save this list, and I'm going to go over here to the quick navigation, and I'm going to add this list to my dashboard. And what it's going to do is just going to put J Ralph over here, if you can see this, and I'm going to access it, and there's the instruments. So what I want to do is I want to see breakouts or breakdowns. Wait a minute, let me go back to this. I'm going to go up here to the top first of all, and I'm going to look at a sort here. I'm just going to say what's trading above. So what it's going to do is on our 60-minute, it's going to basically put on the radar screen what's trading above 60-minute profiles. All right. And it's going to continue to either add candidates out of my custom list that I just made, and be able to tell you when these things are actually changing and meeting the criteria or not meeting the criteria on being above profiles on my 60 minutes. So a lot of people will do this. They'll go in here and basically no sort. You can go over here and sort the column, and you can statically just be able to have your list up and see when conditions are changing. It's a refresh every 60 seconds of when these things are either popping up and say, okay, so Southwestern Energy, we're getting above 60. So some of the concept here is a lot of people will do day trading based on this alone. All right, they'll just look at 60 minutes and they'll see, if they want to be long SWN and we start turning red on a very short-term 60-minute profile, I'm just going to resort that again. If we start showing red on a 60-minute profile, that means it might be time to sit on the sideline. So it will give you the peelbacks. It'll give you the color changes. Peelbacks meaning new, in this case, new supply area starting to happen on a very short term on natural gas. And as we know, natural gas is so volatile, I don't know if you can even gauge this on a short term, but it'll let you know when things are breaking out. So the euro is kind of breaking out on a very short term right now. It's the first bar. It's eclipsed our very short term time frame. Now, I don't trade very short term. And I think for us to talk about short term trades pre-market, it's probably not appropriate because it's pre-market when we do this show, and then things can change during the day very quickly. So I kind of focus on the longer term situations. And of these stocks I put in here, we put the CHK in here. So if you're looking at CHK, AQT, SWN, the three we just talked about putting on the radar screen, you can monitor their activity relative to profiles on any time frame very easily. And you know all the inflection points, and you know when things are happening. Jay, I just noticed that if I try to do a custom sort on a custom portfolio, it's not going to work. So we need to change that and somehow make an amendment to that. But if you do manual sorts, this will all work. So if I'm going into, I hear the music. If I'm going to my S&P 500 and I want to do manual sorts and do this type of activity, it's going to put on the radar screen what's been in a downtrend and then popping its head up on the daily. Or excuse me, vice versa there. Guys, you've been great. Have a good Christmas. See you next week.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.